Well, thank you very much. It's good to be here. I've spent the last 12 months or so being Mr. Gloom and Doom. I'm afraid I'm going to carry on doing that. That seems to me to be a sad start, because I think we are talking about Dole Street, and we are talking about very serious situations in this economy. So I'm going to go through a series of things really just to give us some background to where we are, and especially to think about the young and what we could do about it. So I'm going to really address those set of questions, particularly starting with what's going to happen to the UK labour market. My background is actually I'm a labour economist. I actually started out, my master's thesis many moons ago was about the youth labour market and youth unemployment, and I had assumed by 1990 that that was done and I wasn't going to come back to doing that. And in fact, in 2000 I actually edited a book on it, but we really thought we'd kind of cracked it. Turned out we hadn't. So anyway, it seems to me the background to all of this is in fact that we're going to see very slow recovery, and in my view that unemployment is going to rise and continue to rise, probably to around 3.4 million. But if there are attempts to cut public spending, withdraw monetary and fiscal stimulus too soon, I see every possibility that unemployment could rise to 4 or even 5 million. My view is that actually what we're seeing is that all the activity pretty much in the economy has been driven by fiscal stimulus generated by spending by the government and monetary easing, particularly of quantitative easing, particularly as well low interest rates, and people have been made to feel better by that stimulus. But I see absolutely no evidence that activity is taking place in the private sector, that firms are investing or hiring, and that, as Gordon Brown said, I think yesterday, in my view is absolutely that it would be suicidal to withdraw monetary and fiscal stimulus. That's what's driving the economy. See no evidence of much else. The background to all of this is that now the Bank of England has interest rates at 0.5%, but actually if you were to really focus on the right measure, in my view what is the right measure is actually the RPI. If we'd have been focused and targeting when I was a member of that committee on the RPI, we'd have had rates much higher in 2005 and 6, and that would have prevented a degree of the housing bubble. But if you take that logic through, we should now be focusing on an index that includes some measure, some house price measure, some asset price, and that would be the RPI, and that would mean that we're actually in deflation. And the situation we're faced with at the moment is the Bank of England is actually trying desperately to create some inflation. The recovery is going to be slow. There's still a possibility of a W shape. And in the most recent forecast, people perhaps have not understood this, the Bank of England has actually showed that they can, given the current levels of stimulus in the economy, the bank cannot get back, the economy will not get back to the inflation target anytime soon. So that means that they are signaling prior to the evidence on Friday of output that there needs to be more quantitative easing, more stimulus in the economy, not less. And in fact, the evidence on Friday suggests that they have to do even more. The way the forecast goes is that the Bank of England uses what's called the yield curve, which is what markets think interest rates are going to be, and they use that yield curve to predict what inflation is going to be. And let me just show you this. This is the left hand of these diagrams is their most recent forecast of what the economy is going to do, and that's to say you'll want inflation to be at the target of 2%. If you see the red central line over to the left, it basically says with £175 billion of asset purchases, with the market yield curve the way that it is, inflation is never going to get back to target, and that's why the governor of the Bank of England voted against, my view quite rightly, against the idea we should do 175. They're going to have to do much more, and if you actually even hold interest rates at 0.5%, you don't really get back to target for a very long time. So the evidence we've had in this background, again being Mr. Gloom and Doom, is that actually the evidence from around the world is you should look at deep financial crises. And rather than look at what we did between 1995 and 2007, you should actually look at what's happened in previous financial crises. It turns out those crises have deep and lasting effects, and they have fundamental effects. And this is a famous study by Reinhardt and Rogoff, and they found that in the financial crisis, there's about 85 of them in the last century, and they found that on average, unemployment in these crises rises by an average of 7%, 7 percentage points on the down phase of the cycle, and output falls an average of over 9%. And in fact, if you look at the latest, this is just to give you the context of where we are, this is the adapted data from the National Institute. This tells you how this recession compares to previous ones. So the black line is where we are, and this is how deep the recession is at this point. And as you see, it's much deeper. The blue line is the 90s recession. This is how deep it goes, the amount of drop in output. So in the 90s recession, output drops by about 2%. In the 1970s recession, output falls by about 4%. In the 80s recession, output falls by around 6%. Well, there we are with the data on Friday. That is new data on Friday. That suggests that actually this looks rather closer to the 1930s than anything else. And of course, this isn't over. There is some issue about whether this recession turns into a depression. But just be aware, the talk about where we are in a recession and whether the recession is over or whether the recovery is here, they're really talking about perhaps whether we have any quarter of positive growth. The way I want people to think is just how long does it take you to get back to the levels of output that you've had. And if you look in the 30s and in the 80s, it took 4 years even for output to get back. And in terms of the 80s, it took about 20 years for unemployment to get back to the level that it was at the start of the recession. So the background to all of this is a deep, deep recession. And the lesson we learned from the 1930s is that these things can easily turn into a W. And the great mistake made in 1937 was that people thought that everything was fine, and they withdrew monetary and fiscal stimulus too soon, and that turned a V-shaped recession into a W. And I always tell my students the thing we have to be cautious about in these situations is the downside risk. So 2 possibilities. One is everything's over, and you take off, that's fine. Everything's over and you keep things on for too long, well, we're not worried about that, we can deal with it. The great worry is if things are really, really bad, and then you take stimulus off too soon. And that's what happened in the 30s, and my concern is that that's where we are now. So the question through this, particularly in the subject of this conference really, is to try and think about the differential impact on a particular group. And my worry, as I say, my master's thesis was even on this. And it turns out that this is much worse than I had even possibly expected. Because it turns out that it's really going to hit the young, and is hitting the young terribly hard. Let's just go and look. So this, it turns out, is the evidence across the OECD about what's happened to unemployment rates. So there you are. There you have unemployment rates in August 2008 and August 2009, and then youth unemployment rates. But as you see, we actually have very high youth unemployment rates. If you compare our 19.7 to the EU 27, roughly the same rate for a lower overall rate. So if you like, compared to the overall rate, we have a disproportionately high youth unemployment rate. And we're at about 950,000 young people under the age of 25 who are unemployed. But people probably aren't aware of this fact. And unfortunately, this is the lost generation story. And it's not just the story about a high unemployment rate, it's a high unemployment rate amongst a very large cohort. So we actually have data on the number of people for each single year of age. So if you look at the highest band there in the middle at 23, it says there are about 850,000 or so 23-year-olds. But each year from now, the numbers of people in those categories get smaller pretty fast. So if you look, the number of 12-year-olds, there's about 725,000 12-year-olds, but 850,000 23-year-olds. So this group is bigger than the group will ever be for the next decade. But of course, that's true on the other side as well. It's the biggest group of young people we've seen for 10 years or so. So we are faced with a situation, not just that the unemployment rate is high, it's this very large group. And if this group becomes a lost generation, first, I want that group to be there paying my benefits in the future and paying for us in the future when old folk like me retire. But also the problem is that there's lots of young folk here, and in a way they're going to be haunted by and have to pay for this lost generation in the future. So I want people to think about this, if you like, as a war. This is a war. We have to deal with this situation now because the costs of not dealing with it become even more serious. And it turns out in some countries it's going to have a real effect on us. In some countries it's even worse. So particularly countries where we've seen migration flows from Poland and so on. If you look, this effect that I've just shown you turns out to be much worse in a number of countries, comparable in most other countries, bigger here in the UK than it is in the US, and to some degree why we've got a youth unemployment problem more than other European countries. We've just got more of these folks. But in other countries like Russia, as you see, the number of young people around the world is going to collapse. So in Russia, there's half as many 10-year-olds as there are 20-year-olds. And so that's going to have a major effect. But the point of the story is we're at a point where there's lots of these folks, and I think we need to do something about them. So what's going on in the labour market and why, I'm going to get to why we need to especially care about them. There is some evidence that really things are a little bit better, but no one's really expecting firms to pick up activity anytime soon. Unemployment in this labour market is a serious problem. We haven't seen a big increase in the last month or so in the number of young people, but I think that's going to come really very soon. We have about 950,000 of these youngsters under 25 are unemployed right now. Something to be aware of is that firms are actually not firing people. They're actually reducing hours. They've reduced overtime. But what's happened is they've been pretty flexible. Wages have been flexible. But that turns out to have hit the young. They've simply not been firing lots of folks. They just haven't been hiring anybody. And that turns out to have impacted the young. They've moved to part-time employment, but they simply haven't hired the young. And in this time period, wage growth's benign, and people have responded. How have they responded? Firms are not hiring the young. There's been a growth in applications to universities. Turns out there's been a growth in applications to join the army and other places. But the number of jobs held by the young has fallen dramatically. So if you just look at the proportion of jobs that have fallen over the last 12 months, 62% of those, so if you take the total fall in jobs over the last 12 months is 544,000. It's 318,000 of those are 16 to 24-year-olds. So this recession is really hitting the young worse than any other group. So unemployment is going to be high for some time to come. It's hitting the least skilled minorities and the young the most. Government policy is helping, but the scale of that help is much too small. For example, I'm going to show you we need a big expansion of education. One thing you really need to understand if you say you're going to focus on the young, you say, well, everybody's in this together. Why relatively do the young get to be helped? And there's a great deal of research on this, and I think some of the stuff that we've just done recently really helps on this. It turns out, my view as a labour economist, someone who's worked on this for a long time, it's really important for youngsters, some of them sitting here, it's really important for youngsters to get this foothold in the labour market. And it turns out that I'm going to argue, and economists really have argued this, that relatively we need to help the young, and there's a reason for this, and there's a literature, but we've done some recent work on it, which is that you can actually look at what a spell of unemployment does if you're young compared to if you're older. So just as an example for people having their minds, there's a fantastic British study called the NCDS, and this is a group of people who were born, it's everybody, I'll do it fine, it's everybody born in 1958, so these folks are now, whatever it is, 51. And we've been tracking them through their lives. And what we can show you is the following. A spell of unemployment, so they were young in the 80s, in that last recession. We can show you that a spell of unemployment that they experienced when they were in their 20s has really bad effects on them in their 50s. Has a very bad effect on them. But if we look at what happened in their 30s or in their 40s, did they have a spell of unemployment in their 30s? Did they have a spell of unemployment in their 40s? If they did, it doesn't have a lasting effect in their 50s. Only the spells of unemployment that they had when they were young has an effect. So the argument is actually that, not that this is in a sense an argument why you have to treat them specially. I'm not saying that someone who's 55, an unemployment spell amongst those folks is okay, but I'm just saying that they'll get over it. That's a temporary blemish. The problem for the young is it's a permanent scar. We can't allow them to be thrown on the, if you like, on the trash heap of history. We need to do something about it. So, what are the broad policy responses? I'm going to hit my schedule pretty well. I've got about 3 minutes to go. I'm all right. Worst financial crisis in 100 years. It isn't over yet. The recovery to this point is anemic. No time soon to remove any stimulus. I've actually argued that you certainly shouldn't be cutting public spending in a recession. You'll turn it into a depression. I've actually advocated in the last few days you should actually keep the VAT cut in place and not restore it. And the reason is that, I think this quote is actually, I've used this several times. I want people to think where we are. And this is Keynes' quote in 1931 after the great crash. Keynes said, what really matters is not the fact that we're in the acute phase of the slump, it's that we're in what's called long-dragging conditions of semi-slump. And my view is that, following on from Skidelsky, the object of macro policy is to keep the economy in quasi-boom. That's the time to take off stimulus, and we're certainly not anywhere near that. And so we're in this dragging conditions of semi-slump. I was actually at the OECD high-level employment ministers meeting, I can't spell it, ministers meeting last week, and the view from there was, keep this thing going and focus on the young. First thing says, well, what can we do about this? And I think the policies we really have to think about need to be targeted on the young. So one of the things we've seen is really big increase in applications to stay on in education. We've seen the number of applications to university high, large numbers of people who haven't been able to get in. So I've actually advocated we should raise the education leaving age to 18. I don't just mean the school leaving age, but we need to get these young people out of unemployment into activity. General education is a good idea. It may well be we've got to provide encouragement for these young people, but I was just saying earlier, the great advantage for the Treasury here is at least what this does is it doesn't have an echo to it. It means that if you target on these folks, the world turns and they'll go away eventually and you can get out of this. So we've argued things like increase the number of educators. You look at a graduate, you could actually put graduates into schools as aid. More investment in education and the infrastructure, focus particularly on employment of the young. And we've also argued that a good way perhaps to go was not to think about overall cuts in national insurance contributions, but to just do it for the young, because the focus on the young is the right way forward. And it's temporary and targeted, and that seems like the way to go, and it gives the Treasury in some sense a way out, because this is a temporary program that you can back out of as the number of young people declines. So the conclusion, I'm about on time, the conclusion is that we are deep in recession. In fact, we may well see more negative quarters, and even if we see some growth, it's going to be anemic. The big issue here is that youth unemployment, especially of long duration, creates permanent scars, not temporary blemishes. This is a very large cohort, and I don't want to see them being a lost generation. Time to do something about it, and I think many of the government actions have been absolutely fine. My criticism would be, we're just not doing enough. We've really got to do more and make sure that with 950,000 people, young people unemployed, that's just far too many, and we need to stop. And I'm going to stop. Thank you.
I was particularly struck in the presentation by that research about the effect of a spell of unemployment for a young person on them 25 years later. And of course, a significant part of this government's pitch when we were elected 12 years ago was on tackling long-term youth unemployment through the New Deal, recognising just how damaging that had proved to be. And I think David is on to something very important in warning of how young people could suffer long-term harm from this global downturn if we don't respond in the right way. But I also think there are some grounds for encouragement in what we're seeing at the moment. And in setting these out, it's not my aim to kind of sound complacent or in any way to minimise the seriousness of the alarm that David has sounded. But I think we can take some encouragement from what's happened so far. In this recession, compared to the 1990s, the fall in growth, and David's graph showed this, has been worse, but the fall in employment so far has been less. We haven't seen disadvantaged groups suffer as disproportionately as they did before, and we haven't seen big rises in inactivity or in numbers on inactive benefits as we did before. And that is partly because the measures put in place from 1997 have, I think, stood up well to the test of the downturn. Active labour market policies, expanded since the recession started, have helped. 10,000 new vacancies are notified to job centres every day at the moment, and even now, and they are being filled quite quickly, often through local employment partnerships, which again have performed well. In past recessions, the numbers coming onto job seekers' allowance has gone up, as you would expect. That's happened again in this recession. In the past, the number coming off benefit during the recession has also gone down. But in this recession, the number coming off benefit has actually gone up. Job Centre Plus has delivered for us under intense pressure over the past year, partly thanks to the extra investment that they've been given, but also partly because I think as an organisation, they've learned how to do this job better than was the case in the past. But David is absolutely right to highlight the dangers and the risks for young people in particular. That's why we're investing £5 billion to support getting into work as fast as possible. That's enabled us to deliver the September guarantee around education, extra apprenticeships, the Young Persons Guarantee, the Future Jobs Fund worth £1 billion, and the Backing Young Britain campaign. We've also supported employment internships and expanded the number of places for postgraduate study and other study as well. The first young people at the moment are entering Future Jobs Fund jobs. So far, DWP has committed to funding local authorities and voluntary sector organisations to create over 55,000 jobs. Some things David suggested we won't be doing. We are committed, for example, to raising the rate of VAT back up to its starting rate on the 31st of December, and we'll do so, as we'll confirm again at the pre-budget report in a few weeks' time. Though I do welcome the recognition of the value of that measure, which I don't think has been sufficiently recognised so far as an effective part of our response to the downturn. But I am struck again by David's powerful warnings about cutting spending too early. And the Conservative Party has been calling for £5 billion in spending cuts this year. And I think it's absolutely right to warn of the catastrophic dangers of that kind of very precipitate course of action. There is still a good deal of uncertainty around. We need to continue to do all we can to support employment, particularly employment amongst young people, to avoid making the downturn much more damaging than it needs to be. Thank you.
First of all, I think you need to know that V is the National Young Volunteer Service that was set up in 2006. And its mission was to inspire a new generation of young people to volunteer through a whole range of activity, from short-term, part-time, through to full-time. So we, over the last 3.5 years, have been building that particular service. And we concentrated in the early days, because the context was different for young people then. We concentrated on skills-based volunteering that was short-term and part-time. And it took us a while to build a full-time programme of volunteering called V Talent Year, which we launched earlier this year in public services. And those are in children and young people's services, where young people are doing added value jobs, as well as what people call proper jobs. But they are doing them on a full-time volunteering basis. There are 2,000 of those young people at the moment, and many of them are here today. Now, what has made V Talent Year so successful is the fact that A, it has a residential element, which addresses some of the disadvantaged self-esteem and self-confidence issues that young people who find themselves predominantly at the bottom of the heap have to overcome, those mountains to climb before they can move forward. It also has a cohort element. So you start it and you finish it as a group, and the group supports each other. It is located in places where adults are empathetic to the situations that the young face, and they do not run away in horror when they have to address issues of discipline, language, and all sorts of other things in order to engage young people. So we have always taken our mandate from young people, and we will continue to do that. And the national volunteering service that we have built, we will continue to develop, love, and nourish. But it is not enough at this time, because since 2006, the context has changed drastically for young people. According to Danny's figures, there are just under 1 million under 25s unemployed. The cost to the Exchequer is around £48 million a week. Now, what I would like to say and be able to do is to take V Talent Year to scale. 2,000 is not enough. What I would like is at least 30,000. If the country needs 300,000, then we need to galvanise all our voluntary sector partners in order to do that. What we would like to do is take that to scale through government funding sources, but regrettably it doesn't fit neatly into the package of responses available through the government. So we would like to call for some flexibility in how those rules are applied in order to give this focused national public service by young people a go. The time is right. It is not political. It is a response to a crisis. And I would like to engage the support of all political parties in taking this bigger scheme to address this current crisis among young people, so that they are doing added value stuff, they are socially connected, they are socially engaged, they feel like they're useful, and they're being prepared for future employment and life.
Totally agree with David's basic premise about the scale and importance of the issue, and pleased to hear that Stephen says it may not be quite as bad, but basically I have to say I'm more on the down than the upside of that. And I think it is something that basically we have to tackle from all angles, and all employers, educational institutions, the government and so on. It's one of those problems that is so fundamental and so broad. We've all got to come at it, and we've all got to look at it from many different angles. It is a very complex issue. I think the question about that David raises, which I haven't really grappled with, is really favouring policies that almost possibly give a younger person a job at the expense of an older person, because that's ultimately what his suggestion leads to. And I think that's a very difficult proposition. It may be right, but I think if we are going to, from an employer point of view, really consider that as the right way to go because the relative harm is so much greater, then we really have to engage all of our employees in it, because it's a tough call to actually make that proposition. And I think it's something we need to understand better before we would go along with it. But nevertheless, I'm certainly receptive to the proposition, and something that employer groups in all their forms have to take account of. So what can employers do? I think they're doing many of the things already. I think one important point, which is a plus in the short term, but a negative in the longer term, is this question of employees and employers have been very flexible in their response to this recession, which is very good in limiting unemployment in the short term in terms of flexibility on pay and hours and so on. Much better than the past. The problem that means is it will be even slower in terms of recovering employment, because a lot of those jobs won't come back very easily. And indeed, on top of that, I think many of the jobs that have been lost will never come back, because companies have improved their efficiency. They won't take that staff back on, whatever age we're talking about. And I think that's a fundamental issue about new jobs, new industries and so on, that many are talking about, and we absolutely agree with. We've got to find new jobs because the old ones won't come back. In terms of what the government do to help employers, I think fundamentally anything that helps employment should be taken. David Willetts' party have talked about removing national insurance for startups. We think we should look at removing national insurance for all companies, not just the startups. The costs would be much greater, but national insurance is a critical issue in inhibiting re-employment or new jobs, and also really look at all the employment regulation that inhibits small companies particularly in taking on staff. And we absolutely recommend some kind of exemption for small companies to take on staff without the multitude of employment law that's grown up in the past 10 years.
Thanks very much indeed, Miles. Thank you.
Well, I'm not sure how much I can add, really. So I've been going around parroting what Danny's been saying by way of solutions, not least because as a history graduate, I've got one of those Mickey Mouse degrees with very little real-world application. So economics isn't one of my strong points. But I think to give government credit where it's due, the Backing Young Britain initiative has probably been more responsive and proactive than previous responses to recessions, and particularly the situation facing young people. But I'm not convinced it's gone far enough. As President of NUS, you might expect me to start by talking about graduate unemployment, but my real concern is really with for those young people who are unemployed with no formal training or qualifications, living in some of Britain's poorest constituencies, where they're not fortunate enough to have parents who write broadsheet newspapers, let alone buy broadsheet newspapers. Even I think it's a bit depressing sometimes to find that graduate unemployment hits the headlines more than the people who are really bearing the brunt of the recession. I welcome what David said in terms of educational responses to the recession. I think government, we always talk about schools, we talk about universities, we forget about Britain's colleges, who are often quickest off the mark when it comes to providing practical solutions to dealing with educational disadvantage, not just amongst young people, but also amongst people who've missed out as a result of previous recessions or previous governments who are perhaps as more unwilling to invest in people's educational opportunities and life chances. I think this government, to its credit, has expanded higher education, but this year, in spite of rhetoric from the Prime Minister about not capping aspiration, we saw tens of thousands of people turned away from universities, even though they were perfectly well qualified to do so. Labour has tried to change the landscape in the last decade around widening participation in higher education, which is why it's remarkable and to be applauded that the Conservatives not only have pledged to provide 10,000 additional places next year, but to fund 10,000 additional university places. And I'd like to see both parties go a lot further to say that in this recession, we won't follow the last opinion poll about how the public think generally we should respond to the economic crisis, because with great respect to the British public, we're not all economists, are we? I think politicians need to be a bit more honest ahead of the general election about some of the difficult choices that need to be made in the short term, about our willingness to let debt, perhaps national debt, increase slightly in order that we don't blight people's life chances. And that's really what this debate about youth unemployment is about. It's not about numbers, it's not about statistics, it's the fact that if we don't act now, we will not only cause immediate short-term damage to people and their lives and their communities, we will create long-term damage. This current government should know better than anyone else, having had to deal with the youth unemployment problem. Look at the maps of Britain that are emerging at the moment. All the recession hotspots are exactly the same as last time. Don't complain about Nick Griffin being on Questions Time, complain about the economic climate that's contributing to his party's particular rise. So I think this debate and the particular situation facing young people is deserving of the merit that Danny's given it, and it requires a political response that it deserves as well. I do worry. I mean, this is where there is a problem with graduate unemployment, actually, because I think there are lots of people who are keeping jobs or doing jobs that previously they would have only done to fund their way through university. So working in a bar, working in a supermarket, and these are all jobs which have a knock-on effect on other parts of the labour market if they're being occupied by graduates. So we're seeing probably more graduates entering non-graduate professions and jobs, and I think that has a wider impact in terms of some of the people I was talking about earlier. Be interested to see what the government says today with its information advice and guidance strategy, because I think we do need careers advice, and people do need to be making better and more informed choices early on, because I think part of the problems with inequality in education and life chance has been about social and cultural capital, whose families have it and can instill it and pass it on to the next generation, and who's stuck in the mud and unsure about where to go and not having the signposts at home with the school system isn't very good at it. I have to take on David's point about HE enlargement as a dole office. Again, I think government policy has at times over the past decade been far too utilitarian in its approach to higher education. Unfortunately, when it comes to HE expansion, you can bet that if government ministers have a choice of making the moral case for widening participation or the technocratic widening widening participation, economic case, they'll go for the technocratic argument because sometimes we're a bit too scared about talking about values and making the moral case in a public and a media that doesn't necessarily support it. But HE enlargement is, of course, both of enormous social benefit and economic benefit as well. But in a recession, it's quite right that universities and government will be focusing all of their attention on economic utility and ensuring that people have the best possible chances, both for economic recovery, but also people's opportunities in the workplace as well.
Thanks very much indeed, Roger.
Well, we've actually got here a case study in the generation gap because a lot of young people may be baffled as to why Professor David Blanchflower is being called Danny all the time. He was a star striker for Spurs in the 1960s. Left half. And so for the older people, people sort of automatically call him Danny, and I just see the looks of bafflement at some of the younger people in the audience. He's David. Let me start with what I sort of don't agree with and then turn to the really powerful stuff I do agree with. On this question of macroeconomic policy, he takes fiscal and monetary policy together. And just to make it clear where my party is on this, we do think that there are big risks when governments carry on running deficits on this scale, risks which would in turn jeopardize a recovery if the markets lost confidence in the government's ability to fund this level of debt. But of course, it's for the Bank of England to use monetary policy to achieve its explicit targets on inflation. We take no view about how long they should carry on doing quantitative easing for. We have proposed a big increase in the amount of lending that takes place from banks to businesses to keep the flow of credit going. So we're in favour of an activist monetary policy, but we think that David underestimates the risks of what could happen if government borrowing carries on at the current rate. And after all, at the moment, the government is essentially issuing debt which it is selling to itself. The Bank of England is buying it. When quantitative easing comes to an end, as at some point it will, and people out there have to buy this debt, that will be a big challenge. And if they don't wish to buy the debt, there will be economic disruption caused. So we think it's right to get the budget deficit on a downward path. Where I agree with him is absolutely in the analysis in this excellent paper, which has had a big influence on me and just about every meeting I've been to with my shadow cabinet colleagues about what we do about youth unemployment. I take this paper along and cite it. I would go a step back, though, which is if you look at Britain's record on youth unemployment and Britain's record on needs, the shocking thing, which is again why I'm a bit wary about this pure Keynesian account, the shocking thing is that the trends were in the wrong direction, even in the boom years. So for me, thinking in the long term about how we reform skills and how we improve opportunities for young people, what I find shocking is that, for example, for unemployment amongst 16 to 24-year-olds, between 1997 and 2007, in other words, before the recession hit, it actually rose from 13.4 to 14.4. Whilst across the OECD it was falling from 15.6 to 13.4. So in other words, there's something wrong already. Even in the boom years, young people were not benefiting from the economic boom. Now, when we then turn to what we should do now, I absolutely buy the argument that young people are the clear victims of this recession. What's going on is a shift in the pattern of employment. The number of pensioners in employment, the number of over 50s in employment has risen during this recession, whilst the number of young people in employment has fallen catastrophically, as David's figures showed. So I buy that analysis. And that's why our focus has been to shift resources to help young people whenever possible because of the powerful arguments that you've just heard from Wes. So what I've done is this. We've got a big training budget called Train to Gain, which is essentially training for people who are already in work. It is offering extra payments to companies to train current employees. We've said at the moment, when you've got a crisis like this, you've absolutely got to shift that money to help the younger people trying to get on into the jobs market. So we've said, we would use that to fund, for example, more places at FE colleges, more apprenticeships, more pre-apprenticeship training. And also looking at the crisis we've had in young people trying to get to university this year. And at the moment, there are 130,000 young people who have applied for university for UCAS and not got a place. Now, there are lots of reasons for that. Some of them may have taken a decision to go off on a gap year or whatever. But that does tell us there were young people trying to do the right thing, trying to continue with their studies, who are deprived of that opportunity. So, as a step in the right direction, we've announced for next year that we will have 10,000 extra funded places, funded by offering a discount for early repayment of student debt by people when they're, say, an employer wishes to help them pay off their debt or for whatever reason, and we say the cash receipts coming into the exchequer should be used to pay for more places in higher education. So we buy the analysis of the young people as the victims of recession, and in our proposals for more spending on welfare to work, shifting train to gain to offer particularly training places for young people and extra places at university, we have done our best to try to respond to the challenge which David has quite rightly set for us. Thank you very much indeed.